hope all is well. Thought I'd do a video. I'm in line at the car wash over here, getting the truck cleaned up. But while I'm coming through, I just wanted to share a couple things with you. And you know, my objective for this channel the whole time, ever since I started, was to basically help new investors learn what I've learned. Okay, because I have a little head start on you. Not a huge head start. Trust me, I've been doing stuff. I was buying call options probably 20 years ago while I was sitting in a classroom trying to teach, stressed out of my mind because you're buying a lottery ticket. When you buy call options out of the money, you're buying a lottery ticket. You don't own anything. So I learned and I've lost money doing that. So I'm here to share with you. Right now at this current time, we are experiencing an AI bubble. It's just all there is to it. Okay, you look at the prices, you look at PE ratios, things are overpriced compared to earnings. I know the chip, the semiconductors companies do have a lot of demand for supply and everything like that, but they also spend a shit ton of money. So it's all relative to the PE ratio. That's what I look at. So right now, I'm trying to find companies outside of the AI sector because it is overpriced. You can see it. The other thing that's scary is that around 50%, give or take, of AI companies take up the S&P 500. So if that sector moves down, it's going to take the whole market down with it. So what prevents that from happening? Get outside of technology. And so I've been watching, and I've been working with my AI agent to find companies that have a FPE below 30. Thank you, Keenan Grace, for teaching me that. He's another YouTuber I've been following, learning a lot of stuff from him. It's unbelievable watching him trade. So Home Depot is one of them. I'm at Home Depot a couple times every week, sometimes every day. And so with that said, I started looking at the facts of, is this a hedge against the technology sector, specifically stocks, semi-index sector? And it is. Now the thing is, there's not a lot of negative headlines with real estate market going down right now and stuff like that. So that's why this stock has been trickling down. I get on the chart and I start making my trend lines and everything. And then sure enough, earnings came out yesterday. Technicals are insane. Technicals don't lie, everybody. Anybody who tells you that, oh, I don't look at technical indicator, blah, 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 you're just missing out, because what it does, it helps you give a better probability for success of a trade. Okay, that's all it is. That's all we're trying to do. Nobody can be 100% accurate, but we're looking to get above a 50% accuracy on their decision you can make on a trade, flipping a coin. Now, there's long-term hold. This is what I do. There's the long-term hold companies, okay, the Mag 7, the higher market cap companies. There is, I like writing cover calls. I mean, that's one of my main things right there. Writing cover calls has been my blessing in disguise, and it's also, it's a steady revenue stream, because if you just, it's not exciting at first. Writing cover calls, people bag on it because it's slow and steady. You bring in, 3-4%, okay, on a monthly basis is what I do, 30 days out on the strike price. And so if you look at, you start annualizing that, it beats a lot of different trading styles. So cover calls is my safe go-to style for that. Swing trading. So that's my new, that's not new, I've been doing it for a little while. But swing trading, you have to really get good entries. That's the difference right here. You got to get good entry areas. Low PE is when you want to get in there, and then you have to have a plan to exit. Okay, that's what I did yesterday. If you guys are interested, I will put the link for my video yesterday on the trade I made. And I'm not sitting here sharing my trades just to pat myself on the back and say, "Oh, look at me, look at." It's not like that. Okay, this channel is genuinely attempting to help others Get outside of working for the man. Okay, am I in the right? I'm at the car wash. My thing's not moving. I'm just wondering if I'm still, oh, there we go. Here we go. There's a sense of freedom, everybody. You know what? Relying on a government paycheck is great. I did it for 22 years. I had summers off, right, as a high school teacher. It was great. You had a sense of freedom when those times are off. But guess what? You always had to report back to the man. And since I've been away from that, there's something about not having to answer to anybody, man. It's true freedom to do what you want in life. Now, of course, if you sit back and want to be lazy and not do anything, blah, blah, it's not going to work out, right? You got to find a way to bring revenue in. You got to use one of your skills. But one of the biggest keys to this whole discussion right now, whatever amount of money you bring in, you've got to find a way to put a huge chunk of it into investment accounts. For me, it's 30 to 40%. Whatever I take in, I'm dumping in investment accounts right now. Okay, it's kind of a lot. But you can do that by cutting corners in other areas. Okay, we won't get into that whole thing, but selling cover calls, holding long term, and swing trading. That's the message today. Those three things. Don't do day trading, people. Look, go ahead and try it and try to have fun with it, but it's too stressful for me. I'm trying to swing trading. It's way better. You can make better decisions on longer term charts. All right, everybody, I'm going to get out of here before that noise overtakes. Hopsaw signing out. All right, peace out.